My name is Michael Guyot, publisher of the Lead Lag Report. Joining me for the hour is William Pesek. We're going to be talking about Asia and what's gone on this week with the Bank of Japan. This will be an edited podcast on all your favorite platforms under that Lead Lag Live banner. Please do me a favor and spread the word on that on the show and rate it as well on all those different platforms. William, for those who are not familiar with you, introduce yourself. Who are you? How'd you get involved and interested in markets, in Asia in particular, and what are you doing now?
Sure. I am an Asia-based columnist. I write for a variety of publications, including Forbes and Nikkei Asia, Asia Times, occasionally the Washington Post, here and there, Asia Money Magazine. I've been in Asia for 22 years now, which kind of shocks me. But I began working here as a columnist for Bloomberg, then a columnist for Barron's, and in recent years I've just decided to go out and write for a wider audience of publications. I covered the Fed back in New York City back in the mid 1990s, back when Alan Greenspan was killing Asia with his rate hikes. Been around for the most part, writing about Asia for the better part of 30 years.
Over the last 22 years of living in Asia, and I understand Asia's obviously got a lot of different countries and parts. I'm curious, what's broadly changed over the last 2 decades from you living there in terms of economics or politics?
Well, it's really the stability. Since 1997, when this region was racked with a financial crisis, there's been a lot of work behind the scenes to stabilize financial systems, to rebuild currency reserves, to make central banks more independent. So I think the last 20 years have been the most important period. I'd say even the last 10 years have been the most important period of Asia's development, where you have seen a concerted effort to build more vibrant private sectors. You see countries like Indonesia, like Vietnam, South Korea doing quite well in the race for tech unicorns because of these reforms that have taken place. And of course, the introduction of China onto the scene. 20 years ago, China was important, but China was a tomorrow story. It was a nascent story. Now China is everything. And I like to say, we humans like to talk about how dogs, basically, animals can live in dog years, where 7 years for a human is 1 year for a dog. Well, we're living in China years, where China is speeding things up day after day after day. And it's kind of forcing Asia, including, in Japan, to rethink the way they're interacting with the global economy. And for me, as an observer living in Tokyo and traveling around the region, it's been fascinating to watch.
Since you brought up China, and we're going to obviously talk a lot about Japan here, but since you brought up China, it seems to me that China maybe has been taking several steps back in terms of being more investor or market friendly, even beyond the COVID lockdowns. Is that a fair assessment, given everything that was going on last year in terms of concerns around delistings and transparency of companies, even existing because of what we saw with the education tutoring sector?
110%. I mean, I keep on thinking of, in recent weeks, you've had the death of the former Chinese leader from years ago, Jiang Zemin. And, Xi Jinping has been in many ways clamping down on the private sector that Jiang Zemin back in the late 1990s, early 2000s had spent so much time trying to cultivate. In 1997, I happened to be in Beijing when Bill Clinton was there, and he held a live press conference with Jiang Zemin in Beijing. Live press conference carried around the world, no censorship. American journalists, British journalists could ask questions of the Chinese president. That was unprecedented. You think about where we are now, fast forward 25 years, there's less press freedom in China. The empire has struck back in some ways to curtail the growth of the private sector. And, the big question really is, Xi Jinping now has another 5-year term, a third 5-year term. Will he finally use this next term as a moment to, recultivate China's animal spirits? It's very much an open question. We journalists always hate to say, I don't know, but no one does.
And I've got to assume that the beneficiaries would be, the countries around China, right? I mean, you mentioned Indonesia, South Korea. I mean, there's got to be, I assume, money that's been flowing out of China to just neighboring countries that are more market friendly.
There has been. I mean, it's the countries like Indonesia, Vietnam, I think, are the most important beneficiaries of the flow of capital outside of China. And one of the things that's fascinating is, 2017, 2018, Donald Trump was waging this trade war against China. And I think Trump thought in very simplistic terms that, well, this will force jobs to come back to the US. this will drive factory jobs back towards America. They all went towards Vietnam. They all went towards Indonesia. They all went towards the Philippines. And when Trump was leaving office, one of his parting gifts was to say Vietnam was to add them to the currency manipulation list, kind of a vindictive, screw you to to the Vietnamese government. So, I think a lot of this capital that is leaving it's created this kind of, this race, if you will, this financial arms race in Asia, where every economy is trying to pull this money their way, including South Korea, including Japan.
All right, so that's a good transition to talk about what's happened this week with the Bank of Japan, which had the Bank of Japan's move did have some pretty interesting ramifications when it came to U.S. Treasury yields, which rose quite a bit this week. Outline for the audience, first of all, how the Bank of Japan got here and why the move to increase the ceiling, so to speak, or raise the ceiling was such a surprise.
Well, of course, it's the irony that the biggest news from the Bank of Japan happens when I'm in New York for Christmas. So I've been working a bit out of the time zone, if you will, but it has been fascinating to watch. I think what you're seeing is the Bank of Japan finally being forced to respond to the will of markets. In many ways, because the Federal Reserve has been tightening so much, the yen fell 30% this year alone, at least initially. The Bank of Japan was finding it very difficult to maintain interest rates at the sub 1% level that they coveted, that they preferred. And so in many ways, this is the BOJ admitting that markets and speculators have basically won the day and forced the BOJ to respond in some ways. So you've seen the BOJ say that we're going to double the band in which yields can, in which yields can trade, and that is a big deal. But one of the bigger issues, I think, is that economic conditions on the ground in Japan haven't changed. On average, the Japanese salaryman hasn't had a significant raise in 30 years. Japan right now is importing bad inflation from overseas, high commodity prices on an undervalued currency, and so the BOJ is in a very tight spot. One reason why I think that what happened this week is less of a big deal is I think that this was the bare minimum the BOJ could have done. I think this was the BOJ kind of logging on and saying, we're still here. We're still around. But basically, Governor Kuroda will be stepping down in March, and there will be a new sheriff in town. No one knows who that is. There's really not a lot of telegraphing in terms of who that might be. So this is going to fall to the next BOJ leader, someone to be named later. And so it really is impossible at this time to figure out exactly where this is all going. But the way that you've seen the yen respond, the way that you've seen global interest rates respond, the way you've seen treasuries respond, suddenly there's a lot of concern about large Japanese institutions repatriating money from the US, from Japan, and how that could have a big effect on treasury yields. And so, what the BOJ did really for me was it was the financial equivalent of liking a tweet or sharing something on Facebook. It was their way of saying, hi, we're still around. We're thinking about what to do. But they haven't really done anything very significant yet. When they begin tapering, if they try to put a rate hike or two on the board in 2023, that will be fascinating because Japan, after 20 years of zero interest rates or sub-zero rates, has become by far the world's biggest creditor nation. And you always talk a lot about the so-called yen carry trade. So for 25 years now, investors around the world have been borrowing for free in Japan, moving that money overseas into higher yielding assets in the US, in India, in New Zealand, in South Korea, in Brazil, in South Africa. Whenever the yen gyrates back and forth, that money gets pulled out immediately. So in many ways, the Japanese yen savings, yen borrowings are in some ways the glue that's holding markets together for years now. And any big shift in the yen is going to have very big ramifications, which is a long way of saying that's why I'm not sure we should be expecting for the BOJ to suddenly become the Fed next year. I don't think the BOJ is going to be tightening next year. I could be very wrong about that. I do think you might see some tapering, but the idea that the Bank of Japan will have the wherewithal to raise interest rates at a moment when Japan is skirting recession, at a moment when wages are not rising, at a moment when Prime Minister Kishida in Tokyo is quite weak in terms of approval ratings, to me, it's a bit of a reach. I could be very wrong about that. I hope I am, but we'll see. Japan's debt is denominated somewhat in dollars, but also very much, basically about 90% of Japanese government bonds, JGBs, are held domestically. More than half of them are owned by the Bank of Japan. So in many ways, Japan is a bit less vulnerable to capital flight than, say, other economies might be. When we talk about another Asian financial crisis of the kind we saw in 1997, I think people tend to worry more about South Korea and China than they do Japan in that context. But that is a big problem in terms of, as you mentioned, Japan's debt to GDP ratio is by some measures about 265%. That is by far the most, that means Japan is by far the most crushing debt load among developed nations. And Japan also has a rapidly aging population, right? I mean, the over 65 set in Japan, in terms of numbers, is surging. Japan's not, their birth rate is basically negative. So there is a question of, Jim Rogers, an investor in Singapore, will always say, and he says it kind of as the laugh line, but it's a fair point. He says, I don't invest in Japanese government bonds because I think the Japanese population is essentially extincting itself. Now, there's a bit of hyperbole there, but there is this incredible disconnect between the world's fastest aging population, the world's biggest debt burden, sub 1% interest rates, and how we hold this together. If Japan does experience somewhat of a debt crisis, like I said, it's more contained than you would have in other developing nations or other highly indebted nations, but it would be a problem. It would require a lot of cooperation from the Federal Reserve. I think in many ways this would become a geopolitical issue because the US and Japan are very close allies. And in the age of China, certainly President Biden wants to maintain the US-Japanese alliance. And it will be fascinating to see how that would work out. But, in terms of IMF bailouts, Japan raises the question of whether it's, too big to fail or too big to save. So it will be interesting. I do think, in many ways, you are seeing the BOJ bowing to markets here. I think the BOJ is basically signaling that we've seen what markets are looking for. We've seen what the expectations are. We've seen where the collective wisdom of investors around the world is in terms of where Japanese interest rates should be, where the yen should be. And in many ways, the BOJ is, you can argue, being reactive here. But I do think that the BOJ has a pretty good track record over the decades of managing yield levels. And there's been so much talk over the years of how JGBs are going to crash. Kyle Bass at Hyman Capital, he has shorted JGBs in the past. There have been a variety of efforts to short JGBs in the past, and it's become somewhat of a widowmaker trade. Will that change in 2023? Your question is a very, very sound one. Will the BOJ widen the band even further? I think it's unlikely to happen while Kuroda is on the job, but there is always a risk that Kuroda might decide that he'll fall on his sword, so to speak, and take this step so that his predecessor does not have to. So I think the next few months of BOJ watching will be probably the most important in the last decade at least.
I got to assume the BOJ coordinates a bit with the Fed, right? When they're planning on doing these kind of things, even though it's a shock to the markets, I imagine it's not really a shock to Powell. Do you think any of that comes into play when the Fed is trying to figure out how to communicate the future direction of what they want to do? Because, currency movement does obviously impact inflation expectations.
I think there's a lot of coordination between what the BOJ is thinking and doing and Fed officials. The Federal Reserve has 12 districts around the U.S. I always consider Asia to be the 13th district. In many ways, it's often hard to figure out where the U.S. and Asian economies begin and end. So there's a lot of sort of synergies, if you will. There's a lot of incestuousness between the Japanese and U.S. economies. And, Japan, of course, also is the largest holder of U.S. Treasury securities. And there's always concerns about some kind of big margin call where Asia looks at the U.S. and says, no thanks, and starts pulling its money out of U.S. Treasuries. It's kind of a mutually assured destruction proposition because that would raise yields around the world, which would hurt export-led economies like the ones here in Asia. But there is a lot of cooperation between the Fed and the Treasury Department. There simply has to be in this environment.
Let's talk about China here for a bit, William, as far as also their response. So first, a layout for the audience. Typically, when the BOJ takes action or there's some kind of movement on the yen, China is doing something also at the same time. Lay out sort of the history of China's reactions to Japan's policies, and if this week maybe means something else could be coming from China.
Well, what's interesting about the relationship between the People's Bank of China and the Bank of Japan, there is some coordination there. I mean, both entities claim there isn't much, but there is some coordination. There has to be. But, under President Xi Jinping, there has been this very sort of top-down effort to internationalize the Chinese currency. And in 2016, China succeeded in getting the yuan added to the IMF's standard drawing rights program. And that was a big moment for Chinese currency internationalization. And that's been arguably, I would argue, Xi Jinping's most important financial achievement is internationalizing the yuan. If you look at the SWIFT numbers, the Chinese currency is becoming a bigger player. If you look at the trade you're seeing between, say, we can debate whether it's a good thing, but between China and Russia at the moment, China and Turkey at the moment, the Chinese currency is certainly rising in stature. And that puts an incredible burden on the PBOC because the Chinese central bank is not as independent as you would like. But Governor Yi Gang is basically, he's a protege, if you will, of the former PBOC governor Zhao, who is very well respected. He's also someone who was taught economics in the school of Zhu Rongji, who was arguably China's most important reformer back in the late 1990s, early 2000s. And so he is quite well respected. The real question is, will President Xi Jinping give the Chinese central bank the latitude it needs to do what it needs to do? At the moment, the Chinese currency is going to end the year down about 10% versus the US dollar. It's not where China wanted to be. They wanted to be up 10% because they feel that internationalization requires confidence, it requires stability, and that means a rising currency. So it'll be interesting to see the extent to which the PBOC and the BOJ cooperate in the year ahead. I do hope they cooperate a lot more than they have been. And certainly with the new governor coming in March, it's quite the wild card. No one really knows.
Let's go back to Japan again, and taking out the horrible nature of how Shinzo Abe passed. Obviously, what went right? What went wrong when it came to Abenomics? Right, because that was all the rage. I remember when many years ago I was doing a CNBC segment. I was talking to somebody, and the guy was getting super hyped up about investing in Japan because that was going to be what caused the turn, right? And then it seems to just have completely fizzled out. Just do a little retrospective analysis on what happened the last several years with Abenomics.
Well, Abe, for us, we journalists who were in Tokyo covering this, when Abe returned in 2012, we were deeply shocked because Abe had been prime minister before, 2006 to 2007. And he was one of the worst prime ministers Japan has had in decades. I mean, he was just forgettable, scandals. He lasted 1 year. He was gone. Somehow he dressed himself up as this incredible reformer, Japan's Thatcher, Japan's Reagan, and he came back. What he did very wisely was he harnessed something that happened in 2011 to his benefit. In 2011, that's when the Chinese economy formally surpassed Japan's in terms of GDP. And the Japanese psyche has never quite gotten over that moment. And Abe very wisely used that kind of paranoia to come back to power with this incredible economic revival plan. He had 3 arrows. He was going to reform monetary policy. He was going to reform fiscal policy. And most importantly, Japan was going to receive a structural reform big bang. What ended up happening was Abe really had 1 arrow, monetary policy. Abe did what every prime minister before him had done. He decided to outsource the job to the Bank of Japan, and he focused on things like national security. I always look at the Abe period as a very cautionary tale because Abe had 3 things that no Japanese prime minister had ever had before. He had a very clear plan to raise Japan's economic game. Number 2, he had high approval ratings. Number 3, he had enough time to implement things. Most Japanese prime ministers, Japan's a bit like Italy at this point. Most Japanese leaders tend to last about 12 months at best. Abe broke the mold. So he had this incredible window of opportunity. He had this incredible power within the parliament to drive change through a very change-averse government. And he did very little of that. And for instance, he talked a lot about womenomics. Abe's big thing was, I'm going to empower women. I'm going to increase the female participation rate, but I'm going to, more importantly, create an environment where companies feel pressured to put more women or allow more women to rise into executive positions. It didn't really happen. And so when we look back, I really do look at Abe's period as this awful period of lost economic potential. And, Abe, we can argue that the conditions around his assassination But I think one of the interesting plot points was that Abe seemed to be angling to come back a third time. Prime Minister Kishida had a good start, but he wasn't getting much done. And Abe, I think, felt that he could kind of hang back for a while and then step forward and say, I'm ready to take the mantle again and take Japan forward. And if Donald Trump comes back in the next election, you want me here because me and Trump had a great relationship. And then his assassination happened. It was a very tragic moment in Japan. Japan is a country where we don't really have a lot of guns. These kinds of political assassinations are not all that common. And it really did kind of shatter the the Japanese psyche in many ways. And it's been a fascinating year. Where China is at the moment, where China seems to be heading, could be very positive for Japan. One of the most interesting dynamics in the last 5 years is Japan finally getting serious about tourism. And if you've traveled to Japan anytime, certainly before COVID, but anytime recently, when you go to cities like Kyoto, when you go to cities like Hiroshima, when you go to cities like Sapporo, you hear Mandarin everywhere. And in many ways, Chinese tourism has been a major boon for the Japanese economy. And Japan misses that terribly. You are getting a trickle of tourism back into Japan at the moment, but you're not getting the millions, the tens of millions of arrivals that Japan was enjoying when China was operating normally. I think for Japan, the big risk factor, though, is it's really a wild card to see where the zero COVID policy is going. Will President Xi Jinping be able to tolerate an explosion of cases? Will we see a reversion to the lockdown model? No one really knows at this point. And so I think in many ways, Japan is looking at 2023 as a moment where the Chinese economic engine is suddenly shifting back into, say, something like first gear. Japan really needs the Chinese engine to be in second or third gear to make a big difference. But there is some optimism that in the year ahead, that China's reopening will basically, in many ways, pump growth into the region, increase demand for Japanese goods, and also increase investment flows between China and Japan. As you mentioned, Japan invests a lot in China. China invests a fair amount in Japan. Any increase in that in the year ahead would redound to Japan's benefit. There are a lot of arguments here in Japan that if you take away Putin's war and the effect on commodity prices, deflationary pressures still exist in Japan. And wages, the Japanese salaryman hasn't really received much of a wage increase in about 30 years. And, costs are increasing here and there, but Japan is not experiencing the kind of inflation you have, say, here in the US, where I am at the moment. So that will be an interesting dynamic in the year ahead. In 2013, I wrote a book called Japanization, about Japanification, basically about the lessons from Japan's lost decades. And China, of course, was a major subject of my argument. And I do worry that China might be setting itself up for something of a lost decade, because I do think that, so we've had 10 years under Xi Jinping. Xi Jinping has increased and consolidated his power. The Communist Party is now more dominant than it's ever been. That also means that China's animal spirits are not where you want them to be in 2022. China is investing massively in what this project called Made in China 2025. So, fair enough. Xi Jinping wants to position the economy to be the leading power in everything from, biopharmaceuticals to aerospace, to semiconductors, to self-driving vehicles, to renewable energy, robotics, artificial intelligence, and that's all great. But there's not enough innovative oxygen for the private sector to develop at the moment. And the question is, will President Xi Jinping use the next 5 years to do that? But I do think that the first 10 years of the Xi era also have been a real lost opportunity in terms of China's ability to take the weights off its ankles and to develop a more vibrant and innovative private sector. In late 2020, of course, we saw this very kind of draconian crackdown on internet companies. Jack Ma is the poster boy of Chinese innovation and the way that China wants to lead the tech world going forward. And he was essentially disappeared, like some Russian oligarch. So that's something we're still trying to get our heads around. One of the interesting developments is as Xi Jinping puts together his team for the next 5 years, his chosen candidate for premier, also named Li, he in some ways seems like a bit more of a reformer than the former Li premier. He also seems to have more affection for Alibaba and Baidu and Tencent and these tech companies. And that's a bit of something people are keeping a very close eye on. Will he be another Zhu Ronji like character who has the confidence, but also who's given enough leash, if you will, from President Xi Jinping to shake up the economy in a positive way? However, I do worry that the last 10 years in China have been a real lost period in terms of even just currency internationalization. I mean, there has been progress made, but the Chinese currency is still not fully convertible. And if you had asked somebody 10 years ago if in 2022 they thought the Chinese currency would still be not be fully convertible, I think they might have said you're crazy. But here we are. And I think one of the most interesting things about the last, say, month in China, as we've all been observing, is the extent to which China has suddenly had this burst of democracy, if you will. You've had these massive protests over the lockdowns. President Xi Jinping did something I'm not sure we've ever seen him do before, and that is step back and give the people what they want. And the question is, the Chinese masses, they've now gotten a taste of their power. Will they begin to protest in other realms? Will they begin to protest against internet censorship? The Chinese population can be very innovative in terms of working around Chinese censors. And I think that will be a fascinating thing. But, I think that the ways in which Xi Jinping has operated in the last 10 years has been to increase control over a population that going forward might be less controllable. And I'm not saying we're going to see a Arab Spring-like situation in China, but I do think that the last month or two really has shown the extent to which the Communist Party realizes that we have 1.4 billion people. We told these 1.4 billion people that we would make them rich in return for allowing the government to do its thing. And that compact is broken down. You notice that President Xi Jinping's people have stopped talking about this common prosperity thing. No one really understood what that was to begin with, but they've kind of dropped that from the discourse. Really, 2023 will be a fascinating year for watching how the Chinese population, acts moving forward, and the ways in which the government is forced to either relent or crack down. So, wow. I mean, I think the IMF could have a very busy year in 2023. The SDR certainly could be set up as some sort of reserve currency of the future. Absolutely. I mean, the dollar, you look at the extent to which the dollar is been very erratic in the last year, but certainly we're at a point right now where U.S. debt is past $31 trillion. U.S. inflation is at 40-year highs. Political polarization is what it is in Washington. Very soon, I don't mean to get political here, but very soon you have House Republicans taking over. And the last time the U.S. was downgraded, first time in generations when the U.S. was downgraded, lost its AAA rating from S&P was in 2011 when a group of Republicans played politics with the debt limit. And so there have been rumblings in that direction. And I often wonder about, again, America's most important bankers are here in Asia. It's Japan, it's China, it's India, it's South Korea, and in Singapore. And in many ways, the U.S. has to do a bit of banker maintenance, if you will. I expect Janet Yellen to spend a fair amount of time in Asia in the year ahead, trying to basically drum up support, but also maintain support for U.S. dollar holdings here in Asia. Going to be quite a year, 2023.
I feel like I say that about every single year. That's kind of like a generic statement. One of the things that I've heard other, let's call it FinTwit influencers, financial Twitter influencers argue is that, we're going to see some kind of, not quite in the same way, but some kind of Asian contagion or some kind of crisis that comes from that part of the world, different than what we saw in 1997. I'm curious, just given that you live there and obviously you're a lot closer to a lot of the stuff than many of us here. Do you see any potential for some kind of systemic tail event coming out of everything that's gone on with China and Japan in particular?
Well, what's interesting is Jim O'Neill, who coined the phrase BRICS way back when at Goldman Sachs. he's been talking quite a bit about how the Japanese yen falling to 150 to the US dollar and beyond could catalyze another Asian financial crisis because it would, in some ways, force China to devalue. It would force South Korea, Thailand, Indonesia, Malaysia, the Philippines to also engage in this race to the bottom. It's an interesting thing. Now, the yen certainly is a lot stronger at the moment than it was, say, 6 months ago when it was on the cusp of 150, around 150. Perhaps we can step back from the precipice there to some extent. But I'm not convinced that the yen is not going to weaken next year, because I do think that economic conditions on the ground here, the ground in Japan, haven't changed significantly. You're still stuck with this kind of deflationary environment in an inflationary world. Will the Bank of Japan have the courage to recalibrate rates the way that markets seem to be betting on right now? And will the Powell Fed continue to raise interest rates in the year ahead? If that's the case, the yen could weaken again. And the real question here is China, right? Back in 1997, I remember I was working in Washington and I did a trip with the Treasury Department. Robert Rubin was then the Treasury Secretary. And that was this kind of whistle-stop tour where we flew through Bangkok and Kuala Lumpur and Jakarta and Beijing. And the reason why Rubin was in Beijing was to basically impress upon Chinese officials, the importance of not devaluing. Because the US's biggest fear back in 1997, remember, was China devaluing, which would create this whole new domino effect of currency devaluations around the region. In 2023, the big question really is China. I think, Japan realizes the extent to which it relies on the US for security, and it doesn't want to upset its most important ally in the world. China is a very different phenomenon. And if China does stumble in the year ahead, and it's, I always think to myself, China is led by very smart, very capable people. But if you look at history, every industrialized nation at some point crashes. It just happens. I mean, the US, look what happened in the US in 2008. We can call that a mini crash, but every developed nation does crash at some point, and China will too. The question is, will that be in 2023? Will it be in 2033? No one really knows. But I do think that any crisis that emanates from Asia will probably have Chinese fingerprints.
Yeah, I think that makes sense. Now, I am curious. I mean, I'm going to assume that it's a different cultural, societal dynamic, but are people on the ground, is the average Japanese citizen, are they getting more frustrated? Are they starting to demand more change? I mean, you don't really see, maybe it's going on, these visuals of protests around, the kind of wages not going up, and to your point, the inflation, all the bad stuff that's coming in. What's sort of the mood of the public?
I sense exactly the opposite in Japan. I sense a lot of political apathy, and I say this, for me, it's tough love. I live in Japan for 20 plus years now. I love being there. It's an amazing place to live. It's challenging, like any expat can say, but it's a fascinating place to live. But I sense a lot of apathy when it comes to politics. I think that many Japanese feel like, Japan, they don't like to admit this, but it is essentially a one-party state. It's a massive Singapore with more freedom, press freedom. And I think in many ways, the Japanese population, they've just kind of tuned out. And Prime Minister Kishida is a very sort of plain vanilla Japanese prime minister, a very sort of, out of central casting. He's quiet, he's stable. And I think the Japanese look around the world and they look at the extent to which inflation in the US is rising. They look at political polarization in Washington, and they look at Japan and they say, well, things here are actually pretty good at the moment. That worries me a bit, because I do want to see more ground up pressure for Japanese politicians to do their jobs and to shake things up. I want to see more pressure from women in Japan. I mean, I'm speaking from the cheap seats as an expat male living in Japan. I really do think that the whole Sheryl Sandberg idea of leaning in is something that I'd love to see more from Japanese women. I'd love to see Japanese women become a little more activist, militant, if you will, and demand change. Because as we know from history, men who rule don't tend to yield unless they have to. So I would like to see more ground up activism than I see in Japan at the moment.
Talk about reforms that are either maybe close to getting passing that could have big implications for investors? Anything that's kind of getting your attention, whether it comes to reforms in Japan and China or maybe other parts of Asia, which maybe are not getting as much attention?
I mean, if we're talking about Japan, one thing that Prime Minister Kishida has talked about, which I'm very excited about, is so Japan's government, so GPIF, the Government Pension Investment Fund, is the largest such fund in the world. And Prime Minister Kishida in the last 6 months has talked about finding a way, a mechanism to tap into that savings to basically create a massive venture capital fund to catalyze startup reform, or basically to catalyze the startup boom that Japan has been talking about for 20 years now and never quite seen. That would be incredible. I'd like to see them. Would love to see Tokyo do that tomorrow, but it's still an idea on the drawing board. That's something that fascinates me. Around the region, one of the most interesting dynamics, I think, is in the Philippines. So you have basically Ferdinand Marcos Jr., who is now back in the presidential palace. And it's interesting because so far, he's been a lot quieter than the President Duterte era, if you will. I think that the Ferdinand Marcos Jr. regime has angled themselves a bit more towards the U.S. than Duterte did, a little bit away from China. So that will be a fascinating dynamic in terms of what happens there. The Philippines is a country with such incredible potential, natural resources, a huge, dynamic English-speaking population, great locale within Asia, great allies around the world. They've just been kind of shackled with these governments that come and go and reforms don't really take place. I think for the year ahead, for me, I think the Philippines could be a fascinating place. I've got very, very mixed feelings about another Marcos being in the presidential palace. But people I talk to in Manila will say that President Marcos Jr. realizes the extent to which his family has a global perception problem, if you will, and he might seek to be a genuine reformer to, in some ways, clean up that legacy to the benefit of the nation. That could be a crazy idea, but it also could happen. Indonesia is a place that I think is undergoing interesting reforms. President Widodo realizes that Indonesia right now is creating more tech unicorns than Japan or South Korea. Let's continue that. And there are efforts in Jakarta to remove red tape, to catalyze a continued startup boom. And that would be genuinely fascinating. Southeast Asia's largest economy. Malaysia, it's a place that, again, you just have this kind of circular political system where one leader lasts for a year, doesn't really do much. New government in Malaysia, I'm not terribly focused on that. Vietnam, I think, is an economy worth watching in the year ahead. At the moment, Vietnam is this pendulum economy, if you will. We swing from incredible optimism about Vietnam to incredible pessimism. There's often no place in between. At the moment, Vietnam stock market is plunging, down 30 some odd % this year, the worst in Asia. So investors right now are very negative, but the government there is promising to stabilize things and also churn out more tech unicorns while pulling in more of this capital, more of these factories fleeing China. It's going to be a very interesting year. I know I've said that many times, but I really do mean it. I think 2023 will be a genuinely fascinating year. And for me, I probably won't get many vacations.
Maybe for the next 5 minutes, William, I want to hear your thoughts on maybe the sort of renewed push or focus towards nuclear when it comes to Japan. I mean, you again alluded to it before. They're importing all the wrong inflation. They need to resume probably nuclear energy, right? So just talk about sort of, because nuclear has come up in a few of these spaces throughout the year. Just lay out sort of the way things are going in terms of the likelihood of more nuclear proliferation to resolve some of these inflation issues.
Since 2011, Japan had this massive earthquake. It had the Fukushima crisis. Since then, the Japanese population has turned against nuclear very aggressively. In Germany, Angela Merkel looked at what was happening in Japan, seemed to act accordingly as well. However, Japan's carbon footprint since then has exploded in size. We've been importing coal. We've been actually regressing in terms of where Japan wants to be relative to the Kyoto Protocol, relative to the Paris Accord. So there is a renewed focus on nuclear power in Japan, it's a very difficult subject because, again, the population still has very grave concerns about nuclear power. And the problem is that the nuclear power regulatory agencies in Japan haven't been modernized or streamlined or scrutinized to the extent that they should be. But I do think you will see a renewed focus on nuclear in the next couple of years. One reason is, as you mentioned, costs. Japanese are just looking at the costs of heating their homes, of powering their houses. And in many ways, you will see this kind of leaning back towards nuclear power. But I also would love to see Japan also realize that one of the most important industries of the future for Japan is renewable energy development. And I would love to see Japan redouble efforts. And the government can tap the GPIF fund also to finance this. But we'd like to say that Japan has very few natural resources. But Japan has incredible water, wind, and geothermal assets. And Japan has shown that it can innovate when it needs to. In the western part of Japan, in the island of Kyushu, there's an area called Fukuoka, great city. And there you've had this arrangement in recent years where universities have worked with the private sector on innovation in the renewable energy space. The problem is that you have a lot of innovation, but you have a lot of companies that go starved for capital. And so the more the government can do to channel capital into the renewable energy startups that we're seeing in Western Japan, because I often think like around Japan, you have roughly 2.5, 3 billion people who all worry about choking on rapid economic growth, right? I mean, look at China, look at Indonesia, look at India. Everybody wants to grow 10%. But if Asia consumes like Americans have, then the future is going to be a very dire place in terms of environmental destruction. And so I often think that Japan's future should not be making cars, but figuring out ways to power those vehicles in sustainable ways. Now, nuclear is part of that as long as Japan can figure out a way to regain public confidence in the sector. They haven't done that quite yet. I think Prime Minister Kishida and his party have more work to do in that regard. But at the same time, I would love to see Japan redouble efforts because when Elon Musk was building his gigafactory in Nevada, his first phone call was to Panasonic. I mean, companies like Panasonic have had a decades-long track record of battery innovation. And again, I would love to see Japan funneling more funding and more political capital, if you will, more support into companies like Panasonic and others with an incredible legacy of battery production, but also in the startup space.
I got a couple of questions in my DMs, and we'll wrap up with these asking about where India fits in to all this. Give that, a lot of people don't seemingly want to or address India too much in a lot of these spaces. I've done a couple of them, talk about the growth prospects of India. Relate what's going on with India to what's happening in Japan, because there's presumably some interesting kind of political ties getting strengthened and weakened as a result of everything we're seeing.
Well, one of the things where India is concerned that I often think about is I often think of Prime Minister Modi has been around since 2014. I often think of Modinomics in very similar terms to Abenomics. I think that in many ways, Prime Minister Modi has talked a very good game of raising India's economic game, but he's put very, very few wins on the scoreboard. He's done some of the obvious things. He's increased access to aviation and agriculture and insurance and some important sectors. And certainly India they now have this this GST, which it was badly implemented, but it is something over time that people think will increase efficiency, increase revenue collection, and also reduce corruption. And that's fine. But I also think of the Modi era as a bit of a lost period for India's ability to become more innovative, to become more competitive. And I'm not sure that, India's Gini coefficient, basically a very important measure of inequality, is improving to the extent that you would have expected a number of years ago. In fact, what we've seen from the Modi government in the last 3 years has been them changing the goalpost a bit, fudging poverty figures to make India seem more successful. And Prime Minister Modi has spent more time in some ways building his cult of personality and consolidating power this kind of Hindu nationalism, if you will, than rolling up his sleeves and fixing the economy. And I often wonder, just like Abe in Japan, if someone like Modi, someone who's that popular, someone who's that powerful, is not getting under the hood of the economy, what hope does the next government have to do that? And there are these incredible windows of opportunity. Again, as I said before, we're living in China years. There are incredible opportunities in Asia to shake things up and to make this region more vibrant and to create more economic growth from the ground up, less from the top down. And I'm not sure we've seen enough of that in India. And India, India does have these moments of extreme positivity, extreme negativity. At the moment, there's optimism about GDP going forward. But I think India is an economy that if you told me 10 years ago where India would be in 2022, I'd be disappointed in terms of where they are now.
I think that's a good place to end this space. Thank you, everybody, for joining. Thank you, William, for spending the hour with us. Again, this
Thank
will
you.
be an edited podcast. Thank you, William. Appreciate it. Happy holidays.
Thanks all. Happy holidays. Thank you.